I think that first of all, the important thing to remember is that the XRP Ledger
Mhm.
is an L1 decentralized protocol where the XRP is the bridge currency to complete a lot of the transaction and a lot of the settlements that are taking place on it. So it's kind of like, before you look at it, one way to look at it obviously is an asset you hold, but from the other side, it is an extremely essential functional pillar within the wider XRPL ecosystem and with the ever-increasing list of use cases, products, and offerings that are being developed for the financial service world.
Okay, now we're at the Digital Asset Forum in London. It's 2026. Now, this year, it's a lot more sober atmosphere than this time last year when it was just after the Trump inauguration and we had the likes of Anthony Scaramucci in the house and everybody was very exuberant. It was all about hype. Hype is dead this year, but you know what's happening this year? It's all about backend. It's all about structure. And to talk about all of this and how institutional incumbents may be embracing DeFi. We're here with the brilliant Odelia Torteman, the Director of Corporate Adoption at XRPL Commons. Odelia, thanks for joining us.
Thank you so much for having me. It's a pleasure being here in London.
Well, look, thank you, because, Odelia has been just off back-to-back panels discussing this, and now she's been very grateful to discuss it with me again. So, Odelia, with the focus this year at the Digital Assets Summit on the institutional adoption of DeFi, what's your prognosis about the industry? Look, Bitcoin's dumped basically below 70K. Will we see this? Is this like a pivotal moment where crypto stops becoming hype headlines and it's more about back-end structure and architecture powering a new efficient new payment rails?
Yeah, I would agree so. I think that 2025 showed great progress on that aspect, specifically from the prism of institutional adoption of DeFi. I think we're seeing the DeFi industry moves a bit more from a single market structure into more of an infrastructure layered financial system, whereby you see stablecoins as the monetary base layer, trading as the execution layer, and yields and credit becoming more and more defined and built almost like fixed income structure. I think we're seeing more progress and shift towards centralization around specific protocols, specific DeFi platforms that were able to prove themselves as being much more structured in the way they manage risk, in the way that they define their different types of yields and interest rate. And I think that this is a great direction.
Oh yeah, it is exciting. A lot more people are getting paid in stablecoins. Stablecoin transactions have just surged, but we want to talk about if institutional capital wants to embrace this, they're not just going to put significant capital on the DeFi platform, because I know people have been there. I've been there when I've left my DeFi wallet active on some protocol and everything just gets wiped. So what's happening in the industry to give institutional clients and also retail clients like myself the trust to use these systems of the future?
That's a great question. I think that first of all, the way that on-chain risk is being looked at has evolved. I think that in previous years, it was much more based, on a flexible token incentive model. And now we're seeing it much more based on, I would say, even elements that come from the more traditional world, right? A bit more of the structured term, the different types of collateral hierarchy, if you will, the interest rate itself. So from one side, the way that we address it, again, from a risk allocation perspective changes. From the other side, I think that also as the users become more sophisticated on that, you see less, I would say, interest and willingness to generate and to be part of these DeFi platforms that acts as a black box.
Right.
Now users wants to understand, where are the yields coming from? What are the interest rate? How is the whole thing being structured and managed from a risk perspective? And I think that this is again a great step forward that we're seeing, because it enables to facilitate the access to DeFi-based solutions or product in a more standardized, structured way.
Well, definitely DeFi seems to be the solution for the future. That's been the buzz this year. I've found that's been the buzz. It's exciting. Look, I talked to Stani Kulichov from Aave. I know you were on a panel with him, and he was sort of saying to me, look, a bet on Aave is a bet on this infrastructure for the future. Well, what does this mean for XRP holders? Do you think it's like a bet on XRP is a bet on this infrastructure for the future?
I think that first of all, the important thing to remember is that the XRP Ledger is an L1 decentralized protocol where the XRP is the bridge currency to complete a lot of the transaction and a lot of the settlements that are taking place on it. So it's kind of like, before you look at it, one way to look at it obviously is an asset you hold, but from the other side, it is an extremely essential functional pillar within the wider XRPL ecosystem and with the ever-increasing list of use cases, products, and offerings that are being developed for the financial service world.
Okay, can you sort of give us some sort of example? Right, there's been a lot of big names, Visa, MasterCard, BlackRock, we've had Franklin Templeton, all in the building over the past 2 days. Are they showing an interest in XRP Ledger?
Absolutely. The XRP Ledger, again, was designed from inception to support different use cases around cross-asset transfer and payment.
Wow.
So there was, I think, one of the first ledger that was launched, like I said, in 2012, from inception to support this industry. So it has a lot of features that are pre-embedded on the native protocol level that support enterprise-grade use cases, whether this is the pre-built AMM, the pre-built DEX, the ongoing long list of additional product roadmap that we have to support KYC aspect, to support trust lines.
Yeah, well, they like that, isn't it? So from the foundational building of this, you're kind of possibly working within regulatory frameworks or within sort of the prospect of future working with regulatory frameworks.
Absolutely. This is the blockchain built for the financial service. Period.
Okay. So let's actually drift a little bit more detail. Now, permission domains and permission DEXs seem to have been a hot topic this year. Could you explain the significance of these developments and how they're contributing to the growth of mainstream adoption of XRP Ledger?
Absolutely. I think that these two amendments are basically targeting exactly this area, where permission domains basically enable market makers or markets in general to basically define and control who can participate within this ecosystem, right? So you define predefined roles, predefined terms to who can be part of these environments, and permission DEX basically take exactly those elements of the pre-native DEX that we have on the XRP Ledger, but design it in a facilitated way, again, that enables only KYC-specific defined entities to be part of it.
Okay, but that's the big thing, is it only KYC regulated entities. And look, if institutional capital want to get involved in DeFi, which I kind of think they do now, they're now seeing it's frictionless, the efficiencies, the cost cutting, the cost saving, but they want to know who's all involved, where does the code come from, who's the teams behind all this.
Exactly.
But that's happening then, basically.
Exactly. All in all, who are the team? Like I mentioned, what is the collateral that is being based? How do you define the risk framework, the risk governance, the mechanism around that? And also, how do you then put this to work into different types of use cases?
Okay. Now, look, 2026. Oh boy, is it volatile at the moment. But what can we look out for in the year ahead when it comes from XRP Ledger?
So I think in general, DeFi, I believe, would become in the next 5 years the middleware of the global financial ecosystem.
Okay.
Whereby on the sense of a layer that connects between tokenized money, assets, and data across different jurisdictions and across different institutions. And the XRP Ledger as a layer that was designed to support exactly this ever always on settlement and liquidity layer is extremely designed for that. I've mentioned the product roadmap that we have going on. One of the things that I'm mostly excited about, which is coming very shortly, is basically the XRPL native lending protocol.
Okay.
It was designed to support institutions on their basically ability to tap into the liquidity on chain.
All right.
It is featuring a single asset vault architecture that enables basically to tap into the different assets on the XRP Ledger, whether it's the XRP or the RLUSD or others, and to be able to create this, harness the innovation that comes from DeFi, but in a basically standardized, regulated way for enterprises and financial institutions.
Okay, Odelia, thanks for stepping in here, giving us the updates. Okay, thank you very much.
Well, my pleasure. Thank you so much.
Thank you.
Thank you, guys.
Thank you, guys.